Hey everybody, this is Ray Halstead and Patricia Nass with REH CPAs. Today we want to talk about the one big beautiful bill that has finally passed and is law. Patty's here with me today to go over some of the most important provisions that we feel like you guys would care most about. I think she's mostly going to concentrate just on the individual taxation side. We will do another video on the business side. So Patty, what can you tell us about some of the most important provisions of the one big beautiful bill?
Sure. So I just want to touch base on ones that are effective for 2025 yet. This way everyone knows they're ready for this year. And when they go to file their taxes in the spring, these are things they're going to be looking out for. So first, we'll start with the no tax on tips that was promised. So with that, what they're going to do is it's going to be very similar in the past, as the tips are going to be reported on your W-2. They're still going to be subject to FICA taxes, which is the Social Security and Medicare. But if your income is underneath certain limitations, then you're going to be able to take a deduction of up to $25,000 of those tips off of your taxable income. So if you're single, it would be $150,000 or more, and then it starts to get phased out. And if you're married, it's $300,000 or more.
Now, is this for everybody?
The IRS says you had to have had tips actually before 2024. It has to be an occupation that normally and customarily has tips. If you're married, you have to file a married filing joint return. But as long as your income's underneath that and you're in a profession that primarily does tips, then yeah, you'd be able to take that deduction.
And we're still waiting for that list to come out.
Yeah,
right?
They said it's supposed to be
additional guidance.
Yeah, they said it was supposed to be within 90 days of July 5th. So it should be coming out soon. So the next thing is the overtime. For overtime, you're able to take up to $12,500 per person with overtime on your tax return as a deduction. Again, it's the limitations of $150,000 if you're single or $300,000 if you're married, and you have to file a marriage filing joint if you are married. And with that, it's only the amount of income that you're receiving that exceeds your normal hourly rate. So if you're getting time and a half or double time, it would just be that half time or that extra piece in the double time above what your normal hourly rate would be.
Yeah, I don't think a lot of people are calculating that it's not on your entire overtime amount. It's on that small portion that's above and beyond your normal rate.
Correct. Yeah.
Still good.
Yeah. Yeah, it's definitely, an incentive to, reduce your taxable income. And now I'll talk a little bit more about the standard deduction, itemized deduction. So the standard deduction, it has increased and it will continue increasing each year. But for seniors, they're actually giving an additional deduction of up to $6,000 per senior. As long as if you're single, your income doesn't exceed $75,000, and if you're married, your income doesn't exceed $150,000. So this is supposed to help with the Social Security income, kind of offset that income.
So for a couple, it would be a $12,000 deduction.
Correct.
Pretty good.
So another itemized deduction that's changing is the SALT limitation. So the state and local tax, that limitation was $10,000. So now that's going to be up to $40,000 as long as your modified adjusted gross income is under $500,000. So if you're in a state where you're paying high real estate taxes, high state income taxes, this is really going to be beneficial for you.
Awesome.
And then the loan interests. So, everyone does, I pay mortgage, I have mortgage interest. Well, now if your income is below certain thresholds, you'll be able to take an interest deduction for your automobile interest up to $10,000 as long as it's a new loan in 2025 to 2028 and that the vehicle is finished their assembly in the United States. So this is just promoting, buying, staying within the United States, purchasing your vehicles, and allowing you to take that deduction for that interest.
What about clean vehicle credits?
So those are being terminated. They actually changed the date. So the termination date of this is September 30th. So if your vehicle is purchased after September 30th of 2025, you are no longer eligible for this credit. So anybody, that wants to get this credit.
Time is of the essence. Need to go buy that car.
Yep.
Very good. Well, that's really good information, Patty. If you have questions about the One Big Beautiful Bill and how it affects your tax situation, feel free to give us a call and we'll help you out. Thanks.